Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.
You're watching Stockwatch this week. I'm Ntauleng Lechela, and joining me to unpack your stock-related questions today via Zoom is Chantal Marx from FNB Wealth and Investments and Kearabilwe Nonyana from Scope Prime Africa. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag Stockwatch. Chantal, Kia, thanks so much for joining us this afternoon. So investors are patiently waiting for U.S. non-farm payrolls. Ahead of that, we got other jobs print over the week pointing to a softer labor market. This, of course, has raised bets for a Fed rate cut come the 17th of September. Markets seem to have priced this in already. Hey, are you in the same camp, Chantal? Will we likely get the first rate reduction for the year from the Fed?
Yeah, I think that we are also kind of leaning towards that now. I mean, just aside from the pressure on the Fed to cut rates, it does seem as if the jobs market is showing signs of softness. And just in terms of what the chairman said at Jackson Hole, it seems as if there's been a shift in the way that they're assessing the risks as well. They now think that the risks to the labor market is more pronounced than it is to the inflation story. And in his communication, he specifically noted that the impact of tariffs is expected to be transitory. I don't want to use that swear word from 2022, but essentially that is what he said. And that leads us to believe that the Fed is leaning towards this cut. A lot will depend, though, on what this print looks like this afternoon. And I think that we can expect market volatility if it's either very good or very, very bad. Because just bad is fine. We'll get an interest rate cut and it doesn't really signal too much in terms of the potential for a recession in the US. But really, really bad, I think then you'll see the market repricing for recession risk and perhaps putting the enthusiasm around a rate cut on the back burner.
All right, let's get your take then, Gia. I mean, Chantal mentioned that inflation story and how we might not see a pronounced impact on inflation from the tariffs. Where are you at when it comes to those that rate cut bet and whether we might see a rate cut come the 17th of September?
I think in September we will definitely see a rate cut. I think the question to the market now that they ask themselves is what goes on in the November and December meeting. Because at the very point right where we are right now, we have more people looking for jobs than there are job openings. And that number is quite scary because it hasn't been like that since I think at the beginning of the pandemic, which shows the softness in the jobs in the jobs numbers. But as Chantal said, the word transitory is almost a swear word because it's the first time that I think the Fed got rates wrong. And are they going to get rates wrong this time? Them being too late to essentially induce that economy from going into a slump. And I think the risk of recession has increased in the past few weeks. And even though that economy is really doing great and is almost at full employment, what the market does not want is those tariffs to drag that economy into a slowdown.
And sticking with that tariff story, right? We've been hearing so much around tariffs this week. Are reciprocal tariffs illegal? Are they legal? Just walk me through what you've made of that, because it doesn't seem like there's been much market reaction to that. Are, market participants hanging 10, waiting to see what actually happens?
Yeah, just this week. We've been talking about tariffs for months, and I think that is probably why you're not seeing much of a reaction in the market. I think we're still not sure what this outcome is going to be. The court action essentially saying that these tariffs are illegal will still be tested in the Supreme Court. And I think that that's when you'll probably see the reaction come through, if any. There'll probably be some relief if those tariffs are declared illegal and perhaps partially or fully reversed. But I don't think we can bet on that. And I don't think the market is betting on that either. That is why kind of the status quo outlook is being reflected currently.
Now, a company that can breathe, I guess, a sigh of relief is Alphabet, right? I think it's added, $230 billion to its market cap following a lighter than expected ruling in the antitrust case, avoiding, of course, those penalties and the possibility of a breakup that would have resulted in the group possibly selling Google Chrome. You know, I was having a good laugh about that, Gia, and thinking to myself, I guess this throws out the perplexity offer.
I think it does, but I think what the market is really not seeing is the potential in all these franchises which are within the Alphabet stable.
Yeah.
And I mean, usually when we used to speak about Alphabet, you'd think about search. I mean, how do you have a business such as YouTube, essentially where it's competing with the likes of Disney and Netflix without having to have the same capex expenditure? You essentially are letting people create their own content, essentially bringing down your capex. And I think the market is just trying to put almost a sum of the parts valuation to this business, and this business always seems to not necessarily get the fair valuation like its competitors in the Mag 7. And I really think it's a great counter. And I think with this antitrust case actually coming to bed, you'll see the market start to re-rate the share. And I think of all the Mag 7, it's probably one of the more fairly priced ones.
And let's get your take around that antitrust case, Chantal, and the kind of market action we did see following, Google getting away scot-free. I mean, yes, they have to share some data, but really a lighter penalty, quote unquote, than what we thought would come through.
Yes, and I think it removes a key overhang for the stock, and that's why you saw such a positive market reaction. I think on top of that, we also had news this week that Apple is going to embed Gemini AI, which is Alphabet's version of an LLM, into its search functionality for its new devices. So that partnership, I think, will also could be quite lucrative for the likes of a Google, and I think it entrenches the partnership as well, because one of the reasons why investors were really concerned about Alphabet was that it could have lost exclusivity in search for Apple devices. I think that's still an outside risk, but this partnership tells me that relationship is also entrenched, and of course Apple devices are extremely popular globally, and I mean, the market share is just spectacular, and if you lose that exclusivity, it could have had a big impact on advertising revenue on that search platform. So a few things have happened, and I think that it's been waiting for a catalyst for a re-rating, and we actually got a few in the space of a week.
And sticking with the tech sector, if you are asking about OpenAI and whether Microsoft is the only way one can get exposure to it, Gia?
Sorry, I didn't hear you there. My internet broke up. Is exposure to AI?
Yeah, exposure to OpenAI, and if the only way to get exposure to it is through Microsoft.
I mean, it is one of the ways. I mean, the other ways is to look through DeepSeek. I mean, DeepSeek in China and so forth. But I think Microsoft would be the easiest way to go into that space, where they've already developed the technology and essentially they are front runner in terms of OpenAI. But the problem that you have about getting through into Microsoft is just the valuation is just astronomical at the moment. So essentially, you'd be essentially paying up for it and essentially hoping that they found ways to get some value accretion towards that share price. Because right now, if you are going to be taking exposure through Microsoft, you'll have to pay up for it.
And just your thoughts around OpenAI, Chantal. I mean, I was reading earlier that there are reports that OpenAI will be building a data center in India. And just considering, the dynamics between the US and India at the moment, we know all about Trump's, policies around making America great.
Yeah, I think that some of these bigger AI players that have proper scale and capital behind them are trying to look through the Trump administration, because the reality is if you're setting up a data center, it's going to take you several years to complete that data center and to become operational. So I think when you're making capital allocation decisions, you have to weigh up the cost of doing something similar in the US and doing it elsewhere. And then, of course, there's also the risk of being completely localized. You want to have your data center infrastructure, or any infrastructure really, spread globally. So I think they're trying to look through it. I think it's pretty difficult. It's probably going to be a bit of a political hot potato. But at this point in time, I think it's the only course of action that they have.
And one more tech question. Not sure if any of you look at AppLovin. Viewer asking whether this is one to hold for the long term. Let me give that one to you, Gia.
I don't look at it at all.
Chantal?
Yeah, I mean, we've spoken a little bit about AppLovin in our investor meetings. And look, I'm not the tech expert, so I'll just give kind of a broad level view. We've been wanting exposure to the stock, but it's just been extremely expensive. It plays in a really exciting space, very, very innovative in terms of what they do. But I do think the share price is quite toppish. So I think if you are already a holder, what I would do is, as the share price continues to appreciate, because there's a lot of enthusiasm around that stock, perhaps continue to trim your position, maybe look for other investments that are more reasonably valued, but keep your exposure and ride the wave. I think you'll still do well.
All right, I'm going to give you something from another sector then, Gia. A viewer asking about your views on Johnson and Johnson, saying that they think it's on a buy point.
No, I think they are at the buy point, and I think that they're truly well diversified in terms of geographies and in terms of product type. And I'm not a fan of such defensive sectors right now, when the market essentially just buy the market and get exposure to the top heavy techs. But right now, I think it's reached a level at which you can consider it. But I think it's truly not in a growth sector, but in a very defensive sector. And I think there are more opportunities that you can take advantage of in more growth sectors that will appreciate more in your portfolio.
Gia, your views on HCI?
Yeah, no, I think that generally the PE is quite low. But I mean, it's essentially you need to ask yourself, do you want to be exposed to the commodity coal right now? And looking at right across the spectrum in terms of which commodity is going to do well, and looking at its competitive landscape, only Exxaro has done well in that space. Thungela, looking at what they're getting in terms of freeboard pricing, has not really looked well. So essentially, you're in a commodity that's essentially not doing well, and it's only not going to be driven by economic growth in the world and as well as in South Africa. So right now, it's cheap for a reason, and it's one that I wouldn't be touching.
Okay, were you speaking on AECI or HCI, Gia?
HCI.
HCI. Okay.
In hospital consolidated.
Yes. All right. I just wanted to make 100% sure. Moving over to the insurance space, a question here on whether you would like exposure into the insurance space, whether it is the long-term or the short-term players, Chantal.
Yeah, I mean, so I think certainly as a cornerstone of your portfolio, you would want financials exposure. And then within that, you would want exposure to the banks, the insurers, as well as the asset managers. It's at this point in time just a relative story. The asset managers and the insurance companies have done very well.
Yeah.
And they look a little bit more expensive, while the banks actually look quite cheap at the moment. But within insurance, again, I will spread between long-term and short-term insurance, or you can go for a company like Sanlam, where you get big long-term insurance exposure, and you also get sizable short-term exposure through their holding in Santam. In the same vein, Momentum has guard risk. So some of these businesses are quite well diversified. But yeah, I mean, I think that these companies generally tend to offer you a really good kind of growth over time. I mean, it's not super exciting, but it's super solid. Their return on invested capital, most of them is actually pretty good, way above WACC, compounding returns over time. So absolutely, I would want exposure, but at the right price.
And I mean, you talk about those counters not necessarily being exciting. I was going through Sanlam's results yesterday and I thought, wow, hey, this is a lot. Let's get your take then on the insurance sector, Kia. Even maybe looking at a player like an Outsurance.
No, I think that the defensive nature of these stocks are what you'd want right now. And truly speaking, I mean, I always ask myself, looking at Sanlam's profits. I mean, they made 11 billion. I ask you, where are they getting their consumers when the economy is not doing that well? And essentially, it's where are you essentially getting new business? And they've done well in essentially getting new business. I mean, you look at the new business sales about 7% higher, which is higher than inflation, essentially. And essentially, they get the endowment effect of essentially the market performance as well, because the market has generally done well. So I think you look at the space where Sanlam does long-term life insurance, where Outsurance is essentially looking at more the short-term, and I think they're very different players. Albeit Outsurance, I think, is a better play when you're looking at essentially how they're able to grow the margin revenue in terms of how much margin they can pass on in times where essentially they're not essentially getting any new business. I think Outsurance is priced for perfection, whereas Sanlam and Momentum are priced essentially in a different area. I mean, essentially, I'm looking at a forward PE of about 9.82 on Sanlam, and Momentum right about the same. So with that dividend yield, I'd essentially take on the life insurers more than Outsurance at the moment.
Okay, let's move over to the packaging industry. A viewer asking for a view on Mondi, Chantal.
Yeah, I mean, Mondi is a super cheap stock, but it has been under a lot of pressure from a profitability perspective over the last few years. And I think what also didn't help was that they were struggling to get out of Russia after the Russia-Ukraine war started. They're out of Russia now, and it does seem as if they've reached a cyclical low point, but the stock hasn't really re-rated. So Mondi is one of those companies that I think you can also comfortably put in your long-term portfolio. It's going to be a little bit more cyclical, but over time you should get pretty decent returns, particularly if you buy in when the stock is cheap, which it is currently.
And moving over to Shoprite, we got those numbers out earlier this week. You know, there's also talk around the group's banking ambitions, Gia, and we have a question here on that in particular, your analysis around the group's banking ambitions and whether you think it'll be successful in that space.
Well, the good part is that they have the distribution in terms of the stores they have and the brands that they have, and essentially with the LSM that they cater to, which is primarily at the lower end. But I mean, it's a very competitive space there, because now you're getting fintech players coming into that space, which essentially don't need any brick and mortar. The good part about it is that they have good brand equity. But even in Sanlam's results, I mean, they've partnered with Time Bank now, and essentially also wanting to go into that banking space and essentially using the insurance to get the distribution with Time Bank's clients, and essentially using their balance sheet to write on the loans for Time Bank. So I mean, there's going to be a lot of players coming in, with Old Mutual also coming into that segment. So right now, you look at the banking sector, which is very competitive, and essentially you ask yourself, do they have space? Yes, they have the client. Yes, they have the distribution, but is there enough space in the space where the big four have such a head start over them.
And
I don't think so, personally.
Yeah, let's get your take around that, Chantal. I mean, it's been interesting to see all these non-banking players kind of, penetrate that financial services market. We've seen what Pepco's doing as well. Gia mentioned the likes of a Sanlam, Old Mutual now launching a bank pretty soon. What have you made of, that what we've been seeing in that space and the competitive nature of it?
Yeah, I actually think it's extremely exciting, and we're going to see loads of innovation as these guys try to compete with one another and differentiate their products. I think fintech in South Africa is a really exciting area. We haven't revolutionized in terms of AI, but I think when it comes to financial services, there's really something special in this country around the way that we innovate and the way that we integrate some of these services into our day-to-day. Shoprite, everything they do turns to gold.
Yep.
So I won't discount them completely. What I think is going to happen is that you're going to continue to see this growth and innovation, and ultimately consumers will have loads of choice. Competition is going to be quite rife. Pricing is going to become an issue, and then you are going to start seeing consolidation and M&A activity. And then it will depend on which big bank gets the right fintech player.
Yeah.
We know that Nedbank has already started by making a fintech acquisition, and I think we're going to start seeing more of that. And then I think we're going to see more partnerships build as well. I'm not sure if Shoprite's plan is to go at it alone. Of course, that is something that they'll back themselves to do given their data capability and their innovation background. But yeah, it's going to be very interesting, and I think it's going to be to the benefit of the consumer ultimately.
Yeah, more choice, more options, right? All right, let's get into your stock picks. Kia, I'll start with you. What are you hanging your hat on today?
No, just looking at the results of Alibaba, which came out, and essentially looking at the growth rate in terms of earnings in the Chinese tech sector, which was consensus of going to be about 5.1%. I've just chosen the iShares MSCI China tech sector ETF, and essentially it's just a play on that, just following from the US tech sector earnings and expecting the Chinese tech sector to also give really great earnings, and it's up 30% year to date. I think you can still get a bit more going into the close of the year.
What about you, Chantal? A little birdie told me you're picking a local stock.
I am picking a local stock, ShareMan. Bidvest has been under so much pressure post results, and really, if you dig into it, the numbers weren't that bad. The areas that they are targeting in terms of longer term growth, mainly being services in South Africa and offshore, was actually growing really strongly. It's the volatile areas of their business, notably the terminals business, that really dragged them in terms of the specific results sprint. It's cyclical. It's not going to be like this forever.
Yeah.
And I actually foresee a much better print for the next 6 months and for the next year. I think it's not the most exciting stock. It's not the biggest growth stock, but I think you can park it in your portfolio, and the valuation, importantly, looks right at the moment. It looks cheap. It's trading on a forward PE of below 10 times, which a high quality company like this really shouldn't be where it shouldn't be trading at. So yeah, I think it's a good opportunity, long-term investment. Don't come at me next week if it still continues to go down. We could be a little bit early on the technicals.
All right, let's leave it there. Chantal, Gia, thanks so much for joining me this afternoon. Now, that was Kearabilwe Nonyana from Scope Prime Africa and Chantal Marx from FNB Wealth and Investments. Do remember that Stockwatch pre-records on a Monday and Wednesday at 1 p.m. and is live at 6:30 p.m. on a Tuesday and Thursday, while Stockwatch this week is live at 12:30 p.m. on Fridays. Keep that in mind and keep your questions coming. For now, that's all from Stockwatch this week, but do stay tuned for lots more coming up right here on Business Day TV.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.